So speaking about other special items, again, this is the third of the innovation categories that we have, or the awards rather, that we'll be giving out at the end of the day today, and this is very, very exciting. And one of the reasons why Lloyd's is so involved in this topic around innovation, it's a passion point for us. We started Lloyd's Lab as part of to continue our legacy of firsts. We sort of felt maybe we were slowing down a little bit. After 330 years, you tend to slow at certain points, but 6 years ago, we took a look and asked ourselves, how are we using our convening power appropriately to bring the market together? You think there's, just in our space alone, there's 100 different businesses operating, nearly that many managing agents, triple the amount of brokers, engineers, scientists, consultants, all of that coming together. So how do you mix that up in a recipe that allows people to learn together, to fail fast, succeed faster, and be brave and courageous? At the same time, creating programming that allows us to teach to the extent that you can, teach innovation out into the underwriting businesses in our marketplace, create that place for dialogue together. So it's a really, really important aspect of our business, and I was very encouraged by some of the conversations we've had during the day-to-day talking about how innovation has to be infused in the business as a whole and not a separate silo. And certainly our lab and how we've spread the lab around the world, the multiple MOUs we've concluded with different governments has allowed us to bring some of that diverse thought to the fore. So I would be remiss if I didn't mention that this year we were named the #1 InsurTech Accelerator by the FT in Europe and number 25 worldwide. So super proud about that, and really just gives us a great base to have a conversation. So enough about Lloyd's. We're here to talk about our fantastic panelists. So what's going to happen? Each of our colleagues here will present for 10 minutes. They will finish. We'll move to the next one. So please hold your questions for our final 10 minutes because there will definitely be time. I'm not sure if they'll come up on the screen, but we always have their microphones as well. Okay, so without further ado, I'm going to ask our first panelist, Bob Marshall, CEO and co-founder of Whisker Labs, to share with us a little bit about fire prevention.
Thank you, Dawn. It is great to be here and appreciate the opportunity for sure. Let's see if we can get the presentation up on the screen. It should be showing up there, I hope. There we go. Looks like it's there. Hey, a little bit about myself. I'm an engineer technologist. This is the second company that I've had the good fortune to co-found. I am super passionate about big data and AI and using it for good and solving really hard problems. So the scene that you see on the screen there now, very unfortunate, happens way too many times across the country and across the world. This particular event was the catalyst for Whisker Labs in Ting because this is my sister-in-law's house. They experienced a devastating electrical fire, lost a pet, lost everything that they owned. Very traumatic, terrible experience. I didn't know anything about electrical fires at the time, but it turns out there's 50,000 of these fires. That's 1 every 10 minutes impacting families across the US, way more than that across the globe. The problem is actually more severe across the globe with electrical infrastructure the way it is. So we set out to solve this problem. I challenged our lead engineers, our technologists, chief scientists, data scientists, said, how do we solve this problem? You know, for a couple of years, it literally in the prior company looked like it was on the wrong side of the impossible line. I mean, it's like, how are we going to do this with a simple sensor that will prevent electrical fires? Well, we came up with it. I'm holding it on the screen, on my hand here. It is just one super simple sensor. You plug it in, you connect it to Wi-Fi. It takes 2 minutes. And one sensor monitors the entire home and detects arcing and faults and loose connections and damaged wires that would otherwise cause electrical fires. And everybody's talking about AI here. Every panel focused on AI. And there's zero chance that we do what we do today if not for the incredible AI. We take 30 million electrical measurements per second. We do AI on the device. We stream data to the cloud. We turn the electrical data into an image and use image recognition AI on the electrical data to detect arcing faults that would cause fires in the home. It's literally incredible. It's so exciting to see an application for AI for good like this on the screen. So what do we detect with this? What causes electrical fires? 15,000 times, 25 times a day now. We are saving families and homes, finding things exactly like you see, whether it's a torched outlet inside of a wall, you can't see it, a power strip behind the couch that is powering the TV, a circuit board powering your HVAC, all of these things. And this time of year, as we start plugging in holiday lights and space heaters and heating blankets, incredible. All these things, if not kept up to date, cause electrical fires and devastating impacts to families and homes. But it's not just a technology that identifies a problem. What we provide is a concierge service to our customers. So once we detect a problem, it's not good enough to just tell a homeowner, hey, you've got a problem inside your home, good luck. No, we actually have a network of licensed electricians. You're looking at a video of an electrician. We knew there would be a problem in an outlet. The electrician went in. We detected, he found the problem with an infrared camera. He took it apart. You're seeing the arcing that was occurring behind that outlet. Fix the problem, prevent the fire, done. This family had two little kids, family of 4. This was in a downstairs basement, no working smoke detector. Could have been a devastating fire. And the thing about electrical fires is that these things happen at night. They happen when you're not home. They are often catastrophic, complete losses of homes. Amazing what we hear. David in Texas says, Ting is my guardian angel. We get 25 of these every day now from customers. Rob in Georgia, literally a lifesaver. There would have been fatalities, unfortunately, in Ting homes today. We're in 1 million homes now. There would have been fatalities. There has not been any. We can't prevent all electrical fires. We prevent 80%, but we are literally saving lives in addition to preventing losses for our insurance partners. And we use a B2B2C model. So our model is to partner with insurers and to help them predict and prevent losses, right? It's better for everybody. The best claim is a claim that never happens, right? Predicting and preventing losses is far better for your customer, for your business, and we give all the credit to the insurance company because it's our insurance company partners that are investing in their customers' safety. We have the opportunity to prevent billions and billions of losses. We have the ability to transform and enhance the relationship and delight customers. How often do you hear customers thanking their insurance company every day for providing them proactively with life safety technology to protect their family and their home? That's what we do every day. And we deliver an experience that gives an 87 NPS score, right? It's incredibly high. I mean, we are so focused, we're so privileged to partner with insurance companies that I'll show you in a second. And we focus every day on delivering a fantastic experience that is really good for their brand and ours. So we have 20 insurance carriers in the US today. They provide it for free to their customers, not only the hardware, but the service. And they basically do it in perpetuity because we prevent more losses than the cost of the service that they provide to their customers. So the economics are straightforward. From the largest State Farm and Nationwide to regional carriers, Westfield and Farm Bureau of Michigan, local carriers, all about the insurance carrier investing to predict and prevent losses. Why does it work for the insurance carrier? Without going into details, one, customers care. They have an innate fear of fire. So when you ask them whether they want this technology, they say yes. They raise their hand very quickly and say yes. It's simple. There's no batteries. There's no maintenance. You don't have to install multiple sensors. High engagement. We deliver 8 touches every month with power outage notifications. It's a proven ROI. As soon as you plug in Ting, we have 1 million home years of data now. As soon as you plug it in, the claims drop precipitously. Claims frequency drops precipitously in Ting homes. And that's why we're in 1 million homes today. But we are one of the fastest growing IoT companies of all time. We're adding 50,000 new homes per month. And we are just beginning to expand globally outside of the US. So super excited about that. But we are the largest predict and prevent program in history so far. So do the benefits of Ting stop at the walls of the home? Not remotely close. The opportunity outside the home is actually bigger than the opportunity inside the home. One Ting sensor monitors the electrical wiring of an individual home. The network of Ting sensors monitors the utility grid. Everybody's worried about the utility grid. We're providing it with more challenges. It was not designed to handle the electrification that we're seeing in society today. And I'm going to show you an example of Hurricane Helene here that was talked about, obviously catastrophic losses. So all those white dots are Ting sensors. We have a Ting sensor many ting sensors in every single neighborhood, and you're seeing power being wiped out, the grid being demolished as Hurricane Helene went up from Florida through Georgia into the Carolinas. And this kind of data, incredibly important. Think back to Hurricane Beryl in Houston earlier in the summer. The losses, the catastrophic, power was out for 1 week in Houston. The business continuity, the insurance, the claims were extraordinary. We know what's going on the grid better than anybody ever has. This is critical for underwriting, right? It's critical for underwriting. Understand what your risks are. And we know on a very local level, what are the risks, what are the problems with the grid that are going to impact your claims. And the last thing I'll say is, also talking about wildfires. This is unfortunately, this is literally the start of the first fire on Maui a little over a year ago. On the left graph, you're seeing the output of 10 Ting homes detecting the fault that caused the fire, the first fire on Maui. But what's more concerning is that these faults were occurring for 8 hours prior to this one, right? We are going to help insurance companies understand where the wildfire risk is highest. The worst wildfires are often associated with utility causes because the utility grid fails when it's windy. If you ignite a fire when it's windy, it propagates very fast and the results are catastrophic. So we know everything going on the utility grid. Our focus is to support carriers with data to help them understand risk, to better underwrite, obviously to prevent these losses in the future. We certainly will be able to do that. And it's all about one simple sensor installed in each home to prevent fires inside the home, but monitor the grid outside the home. And we're focused on making sure that this sensor is in every single dwelling unit across the globe. It belongs there, right? Every home, every dwelling unit should have a smoke detector. It does not replace smoke detectors, but this is a technology that should be installed in every single dwelling unit. We intend to create the world's largest, the most valuable IoT sensor network, all focused on safety and resilience for society. So I appreciate the opportunity to be here, and I'll turn it back to Dawn.
Fantastic. Thank you so much. Great. So we're going to move over to Bob Revell, President and CEO of Predicat, who's going to talk to us about managing large-scale casualty risk. Yeah.
That was awesome. Thank you very much. Delighted to be here. Thank you to the IIS for having us be a finalist in the Predict and Prevent Innovation Award. Thank you also to Lloyd's. Predict is what Predicat does. Obviously, our name, Predicat, is predict with a couple A's inserted in it. But we are very focused also at Predicat in the idea that predicting emerging risk is also, when embedded in an insurance model, a recipe for being able to prevent it. And so what we say all the time is our business is to predict, but our mission is to make the world cleaner, safer, and healthier, which ultimately comes from the prevention piece. So as I said, our business is to predict. And specifically what we're trying to predict is large-scale mass litigation. So at the risk of stating the obvious, casualty has a very serious emerging risk problem. Underwriters every day are required to underwrite risks for new technologies, new products that have absolutely no history associated with them and therefore no ability to incorporate those future risks into the pricing. And that fundamental problem led to the largest loss in insurance history, which is asbestos. So I'm sure you're all aware of what asbestos was. It was a magic mineral which was fire resistant and therefore ended up being used in insulation and all kinds of fabrics and a massive number of industries. And later, after it had been incorporated into a large stream of commerce and insured for decades, it was discovered that it caused a rare cancer called mesothelioma, which basically triggered 50 years of litigation, $200 billion in losses for the defendants, $100 billion of which was covered by insurance. The pattern also for the insurers exposed to it was that they had these unexpected, unpriced losses, which led to multiple reserve restatements. Ultimately, the reserve restatements led to ratings downgrades, and insolvencies followed. And there were dozens of insurers that went through this cycle. Now, this was in the 20th century. It was not unique in the 20th century. There was another $30 billion environmental litigation. And in fact, the largest litigation in the 20th century wasn't even asbestos or environmental. It was something that the insurance industry managed to avoid, and that was tobacco, which was a $250 billion mass litigation. So larger than what we talk about all the time in hurricanes and earthquakes. So today, that emerging risk environment is in some ways looking worse than it was in the 20th century. Since about 2015, there has been a notable acceleration in the emergence of large-scale mass litigation. What used to be something like a every decade event is now beginning to look like an annual event, or 1 to 2 times per year. And this goes under the name social inflation. It's one of the pieces of social inflation, also nuclear verdicts, but the social inflation has involved the emergence of opioids, the PFAS or forever chemical litigation, repetitive head injury, talc, Roundup, climate, addictive software design. All of these are litigations that have emerged in the last 10 years, and any one of them has the potential to ultimately result in losses large enough to make them a next asbestos. Incidentally, also, since this time, there has been an increasing and ongoing wave of reserve restatements. So they may be under control. Some also wonder maybe they are the leading edge of another insolvency crisis. So this is the problem the Predicate is designed to solve. So Predicate uses AI. We started in 2012, and I don't think people were calling it AI then. But so we use machine learning and natural language processing on scientific literatures to try to identify emerging risks early. In particular, we're looking for articles where scientists are hypothesizing that some chemical or product or business activity results in bodily injury or environmental damage. And then once we find the existence of this literature, we track it over time. And as the literature gets larger, then it reaches a certain point where it has critical mass, where we think that it is within a range of within the next 7 years, litigation could emerge. And at that point, we also do stochastic modeling to try to describe the potential size of that litigation. We connect all of the modeled litigation with companies. We have 120,000 companies in our data. And so we deliver it to underwriters and to exposure managers to be able to have them use it as though it's a substitute for the history that doesn't exist for these types of emerging risks, and be able to understand what the total exposure is in their portfolios. We also, for a lot of the things that we've been tracking over time, they have transitioned from pre-litigation to post-litigation. And in post-litigation, we also extract information from court dockets, running AI to try to get additional underwriting insights and to understand the current stage of the litigation. We deliver all this in the form of a SaaS software product. Underwriters can log in, exposure managers can upload their portfolios, and they can estimate the exposure in their portfolio, or they can use it to try to understand the best way to design coverage for a client. Today, Predicate, I think, is a global leader in casualty emerging risk. We have 30 insurer and reinsurer clients. We have 8 of the 10 largest casualty insurers and 3 of the 5 largest casualty reinsurers. We have multiple use cases for which it's used, including direct underwriting, typically in large account, heavily used in Bermuda, also in the development of underwriting strategies when thinking about what emerging risks to potentially design exclusions for, or what industries to try to avoid to make sure you don't have too much accumulation. We use for exposure management and also for reinsurance strategy. As one measure, I suppose, or validation of our success, we were acquired by Moody's in early September 2024. Over the last, I mentioned there's been a string of new mass litigations. Over the last 10 years, Predicat has had every one of the major mass litigations in our system at least a couple years before the litigation begins. Some big wins in here. We became aware of climate science that was suggesting that there was increasing levels of arsenic in soil being caused by increasing droughts and increasing heat, and that the rice was picking up this elevated levels of arsenic, and that as a result, baby food, which uses a lot of rice cereal and milk to create the product, was at elevated risk of having high levels of arsenic in it. We predicted this 2 to 3 years before any litigation emerged, and then in 2021 there was a new litigation against baby food manufacturers that is ongoing today. PFAS is something that we had in our system going back to 2013 and building it out over time, starting with PFOA in 2013. PFAS is now probably the best candidate for the next asbestos. We probably have the solution that's most relied upon for trying to develop underwriting strategies to underwrite around exposure to the forever chemicals and to manage your accumulations today. Our next frontier is trying to inform pricing and reserving. In pricing, we're developing and working with some of our clients around the creation of casualty cat loading. The load itself consists of an expected loss from a set of emerging risks and also incorporates the cost of holding capital. You may be interested, our estimate of the average casualty cat load on U.S. liability is 7.5%, which means it is a very cat-exposed line, which I suppose is not surprising given the history. And we also are recommending creating a separate IBNR bucket, which would be released more slowly given the latency associated with the exposures, but would help to reduce the volatility in reserves and with some of the issues associated, but on a modeled basis to make it rigorous. We believe this will increase profitability through appropriate pricing, and in the same time, by incorporating that into the insurance buying decisions, can provide incentives to buyers to reduce the risk. So, to conclude, the Predicat system is designed to have real impact. We believe that by predicting the potential for large-scale mass litigation and by providing tools to incorporate it into pricing and reserving, we can be the solution that can help us to avoid the next insolvency crisis like we saw in the 20th century. We also believe that through surgical underwriting and the development of underwriting strategy and through the development of new model-based products that we can help grow the casualty insurance and reinsurance market even in the face of this elevated risk. We also believe that through this process, we can allow casualty insurance to deliver on its mission of providing incentives for companies to prevent these emerging risks and as a result, make the world cleaner, safer, and healthier. Thank you.
Thank you. Superb. Thank you very much, Robert. Right, so as our last presenter now, we're going to go over to Rohan Malhotra, CEO and founder of Roadzen, to share with us about next-gen auto insurance.
Hi, everybody. My name is Rohan Malhotra. My background is I studied robotics and AI at Carnegie Mellon. I've been building AI products for over 15 years. How I stumbled into auto insurance and why this topic is really close to my heart is I started the company because one of my friends had an accident on the road. And I was in the car behind him. And he had an accident. He essentially got in a head-on collision with a truck. Thankfully, he was fine. I sent him to the hospital in my car. I stood there for 5 hours trying to get his claim processed. And it was by far the most painful experience in my life. and decided, I think we can build a company in this space to apply the best technology to an industry which I think is going to be super exciting because of what is happening in the world of mobility. Roadzen has a simple vision. We want to build the best company in the world at the intersection of AI, automotive, and insurance. We want to make underwriting decisions with precision, to sell policies through embedded partnerships, process claims, and very importantly for this topic today is to make all the cars and drivers in the world safer, and we'll demonstrate how we do that. We actually started in 2015. We have 400 plus employees. We're a global company, US, UK, Europe, and India. India is where we started. One of the interesting facts about India is there are 2% of the world's cars in India, but 13% of all accidents happen in India. So, it's kind of a market under heavy stress, and it's a market which is very good for AI because you get a lot of noisy data, and you can use that data to make good decisions, and then you can deploy it in the rest of the world. There are 1.3 million deaths due to road accidents every year across the world. 62% of all accidents happen what is called due to driver distraction errors. And we believe the technology exists today, specifically computer vision, which is really making computers see what humans can see and make decisions on it, to take this to zero. We believe there's a world that's possible where there are no accidents because drivers are distracted. There's 3% of GDP loss or productivity in GDP due to road accidents. Again, this market is a massive market, and we believe we are solving a foundational problem in the market. So I'll give you an example. This is a guy looking on his left. It's not focused on the road and has an accident. This happens thousands of times every single day in every country in the world. This is the problem we are looking to solve. And how are we solving it? We have a product called Drive Buddy AI. What Drive Buddy does is, it is a dash cam which is dual-sided. One side is looking at the road and one side is looking at the driver. And the two cameras are then powered by an NVIDIA chip that is making real-time decisions on driver behavior, distraction, road condition monitoring, etc., that allows you to essentially prevent an accident before it happens. And we think this technology, a camera is actually the best understood sensor in the world. Because look at how many apps are built around cameras. Look at how many cameras you see in this room currently. So by putting cameras inside vehicles, you can actually improve contextual driving exponentially, and that's the vision of Drive Buddy. We think we prototyped a system which is called ADAMatics. ADAMatics is taking ADAS, computer vision, and telematics and using it to power driver safety across the world. And on all this data, we've built 150 AI models that do multiple things like drivable area detection. Are you driving in an area that's drivable? Like accident detection, distraction alerting, drowsiness, sleepy alert. Are you happy or are you sad? We could even tell you if the driver is frowning when he's in the vehicle. And several other models that we have built that basically do one thing with high precision. I'll show you a few examples of this. So this is like drivable area detection, how the car is driving, where is it driving, as it's taking a turn, is it getting into any dangerous conditions? This is done in real time on the device itself as the devices move, as the car is moving. Now I'll give you an example here of how an error of such kind could have been prevented. When you see hard braking, that's when we give the driver an alert that, he's falling asleep or is drowsy or there's a potential accident that's going to happen on the road. Some of these videos are not playing, but a human driver needs 1.3 seconds to make evasive action on the road before an accident. On average, we provide an alert 3 seconds before the accident. That gives you 100% more time to be able to take a preventative decision, and that can mean the difference between life and death in most cases. We just completed 1 billion kilometers of driving using our Drive Buddy system in conditions in India, Vietnam, Japan, UK, and the US. And I can tell you, over the course of 1 full year of adopting our system, accidents went down 75% in fleets, 82% reduction in real-time incidents like drowsiness, like looking at your phone, like seatbelt compliance, and 92% customer satisfaction for the fleets that use this system. What we envision is every car in the world will have these cameras and will interact, you can interact with it like a mesh network, making all roads across the world safer, making all drivers perform better, and making insurance way more profitable for the carriers that underwrite. Some of the events here: drowsiness down by 76%, phone talking 60%, collision warnings down 50%, seatbelt violations, and we are now prototyping a concierge service where basically we can call the driver directly on the device and inform them they need to pause and take a break. And that 40% of all drivers fall asleep in an 8-hour night journey. And this is what causes accidents. As I said, our vision is we want to build a world where there are 0 accidents caused by human distraction error, and we think computer vision is going to get us there. Thank you.
That's great. Thank you, Ron. So I think we have time now for some questions. They'll either come up on the screen, so I think you can use them on the app. Is that correct? Hopefully someone's going to correct me on that in the audience, but also here on the screen. Fantastic. In the interim of answering these questions, I'm starting to see come up the question. One of the things that I find very inspiring when I speak to entrepreneurs and new business owners that are in the lab with us is a challenge point they had. Either they came in with an idea and they exit with something completely different. They're so convinced or not. So maybe just 15 seconds from each of you, just quickly as these questions start to come in, about a challenge point that you've had when you started your business. Robert, you want to start?
Sure. When we first started, our idea was that we would do casualty catastrophe modeling. This was back in 2012. And we went out and we had already designed some algorithms that allowed us to capture risks from the scientific literature. And we said to people, we're going to do a casualty cat model. And pretty much everybody we talked to said, you're going to do what? Like, why would we want that? So this is a good idea. I mean, you can get into the scientific literature and learn about what scientists are saying about products. And they say, oh, you're going to give us underwriting information. And so we sort of pivoted.
Learning the language,
to not just language, about sort of go to market. What exactly was what was the business decision we were trying to solve? And so we instead ended up focusing for the first 5 years or so entirely on underwriting before the product and the market matured to want to have something that looked like casualty cat modeling.
Yeah, it's a great learning. Super. Bob, how about you?
Yeah, look, I think ours was a technology challenge. I mean, when my sister-in-law's house burned down, it was clear that obviously, and a little bit of research shows that it's a big problem. It's a big global problem. Coming up with a technology solution in our case was particularly difficult. To have something that would scale, that is simple, right? I mean, it was if you put 10 of these things in a home, it gets a lot easier, but then that doesn't scale, right? So it was really, really difficult. And then, the go-to-market model was a challenge. I mean, we looked hard at D2C, and that's just littered with failures. So we elected to partner with insurance companies, and of course, the actuaries want to see 80,000 home years of data right away, and all that, and that's challenging. But now we have 1 million home years of data. But we were very transparent with our partnership with the insurance companies. We share claims data, loss data, and what we see now with well over 1 million home years of data is that as soon as you plug it in, the losses go down dramatically. So it's pretty cool.
Fantastic. Oh, that's great. Rowan, how about you?
We actually started with the problem of claims. I was so frustrated with that claims experience. I said, look, we're going to solve claims using computer vision. You take a few photos of the car, we say what's damaged, etc. What we realized is that in the world of insurance, almost all of this manual work is being done on vision-based tasks. So, document processing, claims, KYC, and stuff like that. And then eventually we decided, look, Tesla was building Tesla Vision for every Tesla vehicle on the road. And we said, look, this system, which is computer vision powered, should be given to every vehicle on the road, not just the high-end Tesla. So we started with vision for claims and then just rapidly expanded across the value chain.
Yeah, that's great. That's exciting because, again, as we say, the Nile is not straight, but it gets you there at the end. That's how the journey is in innovation as well. So super. Let's go to your questions. So, Predicat, what does your system say, if anything, about the new generation of fat loss drugs? Any other molecules or substances on the horizon?
Well, first of all, on the fat loss drugs, you don't have to look too far in the future to see that there's going to be litigation over them, because there already is. At the same time, because they are regulated pharmaceuticals, then we typically don't focus on them with our clients, and so we don't have a lot more to say about them at this point. They are in our system for science that we track, but it's not something that we develop into full loss models for our clients. But in terms of the second part of the question, we have 300 emerging risks in our system. Many of them are chemicals, and so there would be a large number that we could potentially focus on. I'll call attention to phthalates, would be one that is one of the largest risks in our system. And I'd be happy to tell you a little bit more about it later if there was interest, but that would be probably our largest pre-litigation emerging risk, and microplastics.
Excellent. All right, there's a question I think all three of you are going to answer. I'm going to start with Bob around privacy issues related to the data you're capturing.
Yeah, certainly privacy is super important for any time you put a sensor in the home, right? I mean, the nice thing about Ting is that there's no camera, there's no motion sensor, there's none of that, right? We simply measure the voltage. We just do it in a very sophisticated way. But we do collect customer information, right? And obviously we partner with companies starting at State Farm at the biggest, right? So security and privacy is hugely important. We can never compromise that. We will never sell our customers' data for anything that is not, not selling it, but we only provide it to our insurance carrier partnerships. We provide it to first responders, right? I mean, in emergency management, if there's a potential issue in a home that needs to be resolved. But, it is super critical. We will never, ever do anything, other than protect customer privacy.
Perfect. Rowan, how about you?
There are two parts to this question for us. The first is, who are our constituents? We work with insurers, car companies, and fleets. And some parts of this have already been solved. Regulators the world over have taken a stand that the data does not belong to the insurer, it does not belong to the car company, it only belongs to the customer. So, first is consent. You have to have consent for the data before you start using it. The second part to this is, as this data is coming in, a lot of the data is processed on the edge, which means it's actually in full control of the customer. It's not being, uploaded to the cloud. It's on a device that is owned by the customer and inside the vehicle. So that takes care of another layer of privacy for the customer in there.
Fascinating. Any more questions coming from the audience? All right, just as we start to wrap up and I invite Josh to come back, I have one more question for everyone. And it's a little bit about, we've had a lot of dialogue in the room here today around how to infuse innovation into organizations and make sure it's thriving, and we're having new talents coming up as well. How important, as you built your businesses, was mentorship from either inside the insurance industry or outside the industry? I'm going to start with you, Bob.
All right, look, I mean, the people are everything in our company, and we're hiring a lot of people. I think we have 5 new people starting this week. And, fortunately, when we started, I was able to pull over some of the best people from the prior company. But, we focus a lot on hiring the best, the brightest, and people that have the same kind of passion that we have for protecting customers. I mean, we're responsible. Every time we put a Ting in a home, we're responsible for a home and a family. So we look for that passion in everybody that we hire, whether it's on the technology side or the customer support side.
Super.
So we did hear people talking a lot about how the mission orientation is what draws people in, and that was absolutely been something that's been the case for us. The team is very committed around this cleaner, safer, healthier mission. I'd also say that mentorship, we were, for instance, twice in the Lloyd's lab. And
I promise it wasn't a setup, actually, when I asked the question. Honestly, it wasn't.
and we weren't in the second time because we failed the first time. We had two different projects that you were kind enough to let us pursue in the lab, but we learned a lot in the London market and from mentors in that experience. I would say in general, it is the dialogue with clients and how much you learn from them is critical. Initially, none of us worked in the insurance industry. We were all researchers, academics, and after a certain point, almost everybody we hired were actuaries or people with experience in the insurance industry. And in a lot of these things, I think there's this balance between an outside perspective and an inside perspective, and you always have to have that. Same thing goes with interactions with clients. There has to be a part where you're constantly learning from them and a part where you're leading them and challenging them.
Yeah.
And it's a dynamic in all of these things.
Yeah. Rowan?
I think one of the biggest startup killers is if you're a solution looking for a problem, that you build something and then you try and look for who's going to pay me for this. So for us, it was very simple that we just want to keep our ears to the ground and talk to our clients and mentors in the insurance industry. And is this actually solving something for you? Is this going to make customer experience exponentially better? Does this improve outcomes? And we knew nothing when we started. We know a little bit, but constantly trying to keep our ears to the ground to make those decisions.
Excellent. So the last question that's come up, it's a question for one of the teams, but I'm going to ask everyone in a moment. Given that the IIS is a history of thought leadership, that's what we're here to do, to exchange and to learn from each other. Each of your models provides an enormous amount of data. Are you able to turn any of that data out for public good? Obviously, it's for private consumption of your client base, but maybe, Rowan, if you could start, and then we'll lead over the panel. Is there an opportunity for any external thought leadership or sharing for public knowledge?
I think we are constantly looking to share the data we collect internally. There's, in the world of AI, everything that is being built today is being built because a lot of the early pioneers shared their findings in open source. So now we can adopt them in enterprise. So we do that a lot for just the technology, and then the data piece, road conditions, road monitoring, accident hotspots, stuff like that is useful for governments, it's useful for fleet owners, it's useful for cities. So we are looking to make that available broadly and accessible to everybody.
Great. Bob, how about for your business?
Yeah, I mean, we, from a public safety perspective, we take that very seriously. Our customers receive notifications regarding, grid problems in real time. It's all free. They can share it. We encourage sharing it. But the overall data set, and we definitely have a significant opportunity to monetize our data set for various business-to-business sectors. And insurance right at the top, because when you take that hurricane in Beryl in Houston that devastated and wiped everybody out for a week, I mean, what our data showed was that Houston's grid was the most vulnerable grid way before that. It was a simple Category 1 hurricane, in theory, right, that wiped it out. But our data, is going to be very meaningful for insurers. It will be for utilities, too, to take, because they just don't know this information. We can provide that data, but that'll be a business relationship, right? To provide that data to help improve the grid for the utility and also for underwriting for insurance carriers.
So we do a lot that is promoting in the public some of the findings that we have. But I mean, interestingly, I think that, the question was, what is our business model? Our business model is that we sell our information to insurers, reinsurers, and brokers. And the problem with just putting it out into the public is that it's not clear that necessarily leads to action often. And the beauty of the business model of injecting the information into insurance is that we actually think that's the best way we've been able to think of to scale it to being able to change the world.
All right, excellent. Another question that's come in here, and this will have to be our last. Josh will get mad at me in a moment. But let's talk about scaling, right? There's always those moments of push and pull on scaling. So again, just a learning, we referenced in one of our earlier, I think 2 of our earlier panels, the challenges of if a business is being incubated in a larger organization, becoming crushed by the silos and such, which is, I think, an example of failing to scale before you even get going and being overwhelmed by the situation you're in. Any stories that you want to share about that or thoughts? I'm going to start with you.
Yeah, I mean, look, I would say, I had a lot of great lessons learned from the prior business where, we had a very successful business and sold it, but we had a lot of small businesses and a lot of different things we did. And one of the things we've tried to do in Whisker Labs is to stay super, super focused. I mean, we don't have to change anything. We just have to focus on executing, and this thing can go in 1 billion dwelling units. Just keep doing it. Focus. Don't get distracted. I mean, for this audience, we've been pushed for years. Why can't we put this in Europe or Latin America or Asia? And frankly, we said no, just because we had to focus. We had to get it right here.
So having that courage to
I mean,
stay in the lane.
I think Warren Buffett said that, and I totally, the courage to say no. So we've said no, but now we finally have demonstrated that it does work, it's proven, it can scale, and now we are obviously going to grow internationally and into commercial markets, but we're being pulled, which is nice, right? So
that's great.
So Predicat has a super collaborative, multidisciplinary culture. The group of people, in order to look at casualty, you've got to have a really multidisciplinary group: economists, toxicologists, environmental scientists, actuaries, engineers, data scientists, et cetera. And that creates this culture of collaboration and respect for other disciplines and of just mutual respect for other disciplines and other people. And I'd say the closest we came to coming off the rails at one point was just when we made some bad hires that undermined our culture of collaboration in certain ways and spread, throughout the organization. And it was terrible, actually. Unfortunately, a couple key people left. They were unhappy and left. And then, we got super alert to making sure you had the right people to fit our culture.
That's great.
And it allowed us to scale.
Great observation. Super. Rowan, how about you?
This is a great room. So I have one request. Once you've proven your product works, your tech works, you got to get it deployed, get the contracts done. Insurance companies are very slow in executing contracts. So I have a request for everybody in the room. Let's go faster, because that will help us scale.
Well, I was thinking this panel would be ending on a bit of a call to action. That's not the one I was thinking of, but it's equally as valid. It's great. No, absolutely. But thank you so much. We've had a great discussion here that ties together our earlier panels around that multidisciplinary collaboration, having courage, being focused, and continuing to evolve. So thank you so much. Please join me in thanking them.